Stocks on Wall Street extending their losses Wednesday afternoon, Treasury yields falling as well, after the Federal Reserve cut interest rates by a quarter percentage point for the second time this year. For more on the Fed's move and its implications for equities investors, we're joined by Kevin Heel. He's a senior analyst at Argus Research. Welcome, Kevin. So why did the market sell off further after the Fed rate decision? What did investors not like about it?
I think some of the investors out there were looking for more of an aggressive stance by the Fed. As it cut 25, and the potential was for that someone might look for 50, but and given the future outlook that they might not have any rate cuts going forward or in December, helped the sell-off in equity market.
Well, let's talk about that. The Fed said in its statement that it made the move in light of what it called global developments for the economic outlook, as well as muted inflation pressures. So was this insurance cut needed?
I think, back in the past, you'd be able to look at the Fed would be able to look just at the U.S. economy as a whole, but now as we have to look globally and where our interest rates and our curve is the place to be with positive yields. And we think that the Fed has to respond more on a global basis than it just is on a domestic basis.
The Fed, looking ahead, as you were talking about earlier, it held the door open in its statement to future rate cuts, but there were mixed signals about where it might go. The median policymaker projection is for no further rate cuts, but 7 of the 17 policymakers sees possibly one more rate cut. So in light of that, where do you see the dot plot in terms of where cuts are going, the schedule?
Yeah, I see the dot plot is maintaining probably, right around that, 175 area, and that, you have one particular Fed governor has more of an aggressive stance. The vote was 7-3 today, but it really was 8-2. As the Fed Governor Bullard looked for a 50 basis point cut. So I think the dot plot, they're going to have to lower their future expectations on a go-forward basis, but probably be pretty consistent, as they indicated over the next couple of years that rates should be in this range.
So based on the Fed statement, and Fed Chair Powell just started speaking, so you haven't heard everything yet, but is there room for one more cut by year's end, as you see it at Argus?
We see it as had potentially less than a 50% chance of another rate cut, but either in December or in the beginning of next year, and then take another pause as we have a upcoming election, and the Fed doesn't want to be seen to responding to particular folks in Washington, D.C.
So, Kevin, ahead of this rate decision, I saw your papers, and at Argus, you tend to favor value stocks right now, which we've seen the rotation out of growth to value of late, and also you see further progress for the 10-year Treasury. In light of today's Fed rate decision and the commentary, how should investors reposition their portfolios?
We had seen as the Treasury 10-year had gone from basically 146 up to almost 185. You saw value come back into play, and growth stocks have been sold off. But now we're seeing another, the 10-year coming back down, which leaves funding costs for those companies, maybe in the high yield sector that are more growth-oriented stocks. It bodes well for them going forward.
So you possibly see the rotation back to growth then?
If we continue to see a rally in the 10-year, we would expect that growth would once again outperform value.
And 10-year Treasuries, where would you be?
We'd probably, we're hopefully projecting a steeper yield curve and looking at that, but probably between the range of 160 to 2% over the next couple months and towards year end.
Okay. All right, Kevin, thanks a lot for your analysis.
All right. Thank you.
All right. Our thanks to Kevin Heel, senior analyst at Argus Research. I'm Fred Katayama, and this is Reuters.